Hi, welcome to the Investment Blueprint. I'm your host, Raghu Kumar from Rain Technologies. The Investment Blueprint is a weekly podcast where you can find me interviewing experts in the world of data-driven finance. Today, I interviewed Tejas Khoday from Fyers, a discount stock brokerage based in Bangalore. Today was a big day for Fyers. They crossed 100,000 users, and I stalked, Tejas' LinkedIn. I love stalking people on LinkedIn, and this is what I found out. So congratulations, Tejas. That's a really big deal.
Thank you.
This is a pretty awesome feat, crossing 100,000 users. Fyers is a self-funded brokerage, and one thing I like about them is that they really cater towards algorithmic traders. In fact, many of Rain's clients opt for Fyers. Tejas has stated that he got into trading at the age of 16. We will dig into that a little bit today. How did he get hooked onto trading at such a young age? We will then pivot to what Fyers is doing today and how algorithmic traders can potentially benefit from their products and services. We will also talk about algorithmic trading in general and the types of strategies he feels are best suited for traders. So Tejas, welcome to the podcast.
Hey, thanks for having me, Raghu.
So, this has been a long time coming. We've interacted online a few times, but I don't think we've ever spoken in this kind of a manner. So let's kind of take it back. Let's kind of, see where you got started and how you got started with trading. Where did that passion come from?
Well, where do I start? So when I was a young kid, my father ran into financial troubles. He was a businessman. He was a builder, a real estate builder. And back in the 90s, he was doing really well, and he ran into a rough patch and kind of got caught in the recession, the real estate recession of the 1990s. And of course, that led to his bankruptcy eventually. So I think, so years later, somebody once told me that it was in the aftermath of the Asian financial crisis and the direct or indirect effect it had on the Indian economy and so on. So I didn't really understand. So I became curious from when I was maybe a young teenager, and I wanted to dig in and find out how the hell this could happen. And then I eventually came across the concept of a floating interest rate loan. And it was quite fascinating to me because when there is a deal between two people, and say I agree to pay 1% a month for a loan, and that should ideally last for the duration of the loan period. But in real life, it doesn't. It changes with the interest rates and the economy. And so that really got me very interested in the economy, and then that led to how the economy works, subsequently to the stock markets. So yeah, I ended up dropping science in high school, and I opted for economics without anybody's advice. And so that's where it began. And so when exams were coming up, right, so I went for last minute studies to my friend's house. And, of course, I was studying economics and finance. And her dad happened to be a retired person, and he was trading full time. And so every time I walk into her house, he'd have like CNBC, and he'd be like reading magazines. And then, eventually he got me into it. I wasn't even 18. I was about 16 or less than 17. And it was, I think in 2006, it was a huge bull market then. And that's when I got started.
Mm-hmm.
Yeah.
Got it. So since then, it's been like a one-way track. You haven't looked back.
Yeah, because I found it really fascinating. So I invested in the DLF IPO in 2007, and that was like my first big investment. I mean, when I say big relative to the amount of money that I had or I had borrowed from others. And I learned a lot because the markets crashed in less than a year later. So most people got washed out of the market, but I just became resolute to try and understand how this thing works. And so, one thing led to another, if you ask me.
Got it. So, you were actually working at Zerodha, one of, I guess, your competitors and obviously Upstox's competitor. How did that happen? And how do you think your stint at Zerodha kind of helped you eventually when you started Fyers?
Yeah, so I studied in Bangalore. I finished my graduation here, and then I got sick of the city. I needed a break, so I did study outside for a bit in New Delhi, and I came back to find a job. And I wanted it to be in the stock market space. And so, I went out applying to various brokerages. Like the typical share Khan of the day was very popular, IIFL, and I did go and give interviews, got selected, but just couldn't strike a chord with the people there. And so I landed up in Zerodha for an interview, and yeah, I just got selected in the first few minutes, and yeah, it was just like a really small setup, and I was kind of excited by the prospects because the people around me were like me in some way, I guess. So yeah.
Got it. And what were you doing there?
Well, not much. I was in support and just a little bit of everything. The firm was really
Okay.
new, and so I had a little bit of support, a little bit of risk management, a little bit of sales, a little bit of everything. Yeah. So I wasn't
Got
there
it.
for too long, but I did kind of soak in uh, what was being done and perhaps what needs to be done to run this business. So yeah,
And do you think
because
that helped you
I did
eventually?
work
Yeah.
closely with I did work quite closely with the core team there, so I think that helped.
Got it.
Yeah.
So, I mean, obviously this is a pretty obvious question, but I mean, how much do you think that factored into you starting Fyers later on?
I think it did have because it gave me a base in the sense that I wasn't there for too long, but I think I'm a quick learner and just a whiff, it was there for a short stint. And so, yeah, I think it did help me understand how this business is run. And it was a very low cost setup. And in comparison to the branches, like the regional branches of these other larger brokerages, like it was incomparable. So I think I got the idea over there, and I realized that it's not about how much you spend on your physical infrastructure, but rather what you do online. And so, yeah, I think it did help. It would be unfair if I said it didn't.
Of
Yeah,
course, yeah.
yeah.
Um, so then you took on some other jobs, right, before starting Fyers. What was that journey like? And eventually, how did you decide to start Fyers?
Yeah, so I've been working for a long time. My first job was to assist my uncle in uh, in his silk factory. So I've even worked at a silk factory when I was in college and high school. So just to go and see how that works. So I've been doing a lot of different things, side gigs, before I even graduated. And so, yeah, I mean, after Zerodha, I went on to Futures First to trade commodities there as a prop trader there. So it was running a decent sized book. But of course, the main takeaway from there was the way they approached trading, right? So I was a retail trader for the longest time, and it's quite a lonely thing to do because you don't really have anybody to talk about your trades and so on. So you generally trying to find some forum online, like back in the day, Trader G used to be very popular.
Hmm.
So, so yeah, I mean, uh, that was good. And so, yeah, I did that for a bit. I managed some retired people's money in 2010, 11, 12, 13. And eventually I was like, so I actually wanted to start a hedge fund.
Okay.
And yeah, I did. And I tried talking to people, and whenever I did approach them, it was almost like they were giving me gyan, and that's when I realized that it's a gray haired profession. You need a lots of years of experience under your belt because most of these guys with the kind of disposable incomes that is required, for fund managers to manage is, I mean, though they have a lot of experience under their belt, and so it's not so easy to, uh, I mean, to get an AUM from them. And so yeah, I realized that early and quickly pivoted into the technology side of things. Yeah,
Got it. So that's very
yeah,
interesting. So you had that nice mix of having worked at a brokerage and you were a trader, right? So you kind of had that good mix and you eventually started Fyers. When you started Fyers, did you feel like there were enough players in the market? Was that ever something that went through your mind, or was it something you just wanted to do because you wanted to do it?
Well, I was going to do it regardless, but so early on, right, in 2011 and 12, and like when Upstocks began, there were only two discount brokers for the first few years, and then a few others came onto the scene. So when we started, it was like there were so many of them out there. So we were just one of the many discount brokers, and so we weren't taken all that seriously by anybody. Yeah, so we were going to do it anyways, but yes, we started in a very different environment from, say, an Upstocks and a Zerodha, because we were competing like with 20 other people out there. And so
Exactly.
to be different from all of them is much more of an uphill journey, according to me.
Sure.
So, yeah.
And that's, something I was going to ask a little later on, but I'm just going to ask it now. You have kind of had now Fyers be associated with, a lot of algorithmic traders. I mentioned at Rain, a lot of our users just have accounts with Fyers and they want to just, link their API accounts. How did that happen? Was that a conscious decision where you said, okay, I want to cater towards the algorithmic trading community, or is it something because you were already passionate about it, so you're kind of scratching your own itch? Like, what happened over there?
So when we started out, we were very clear, right, that we do want to cater to those who want to take matters into their own hands and trade very often. So the target market was quite niche to begin with. It wasn't very mainstream. And the more time we spent with these users, the more feedback we got on the things that are more useful to them. And so whatever we did was along those lines. Like, this is one of the reasons why we did not introduce direct mutual funds for like a really long time, because it didn't matter that much to our users. And so we function on an API level across all our applications anyway. But I think in late 2019, we kind of made the decision to open it out to everybody, because they would write to me directly saying, the trading view UI wasn't their first preference. They want to do it on their own, and so on and so forth. So we took that call in 2019, and once we did that, we really kind of focused on our API. Firstly, we made it very easy to access, so we update it very regularly, and so yeah, it wasn't like a huge plan or anything. It just happened on the fly.
Just happened, yeah. That's amazing, yeah. And how do you think, say over the next 5-10 years, as there's a lot of competition and, the Zerodhas and Upstocks of the world are obviously still going to be there, how do you think Fyers is going to stand out in the next 5-10 years? I mean, generally, what are your kind of goals for the company there?
Well, so I think we want to be the torchbearers of retail investors. And so we think about it like we're going to cater to the evolving needs of investors, because I don't think that I don't have a binary view of the industry. It's not a winner-take-all market, right?
Right.
Like I was telling Rachna a little while ago that NSE is the monopoly, and the exchanges, the MIIs in India are the monopolies. So the intermediaries can get really large, but there's always space for maybe 5 or 10 large brokerages, and we certainly will be or would love to be one of those companies. And so we're a very product focused company, and we don't chase growth that much because we're bootstrapped. And so we have to be conscious of how we spend our money. And so it's, we like it that way. Yeah.
Amazing. Yeah. So let's kind of pivot a little bit now. We'll talk a little bit more about trading. That's the focus of this podcast. And obviously the intent of this podcast is for our listeners to, ultimately make better decisions when it comes to their trading and investing decisions. And ideally in a data-driven manner, right? So obviously, when you're running a stock brokerage, you are privy to a lot of user data and analytics and insights, right? And I know you're very active on online forums and things like that. What are some common mistakes that traders make, at the retail level?
Yeah, so, okay. I think one of the main things is that they get carried away with beginner's luck. Like the first few trades are likely to be profitable for some odd reason, perhaps because traders aren't very nervous or they enter at a time when the markets are already trending. So they get lucky in the first phase. And then so they get really carried away and overexcited by that. And then the usual thing, right? Like let's say they happen to make 20% in a month. So now they're going to multiply it by 12. Okay, if I can make 20% in 1 month, then maybe I can make 20% every month. And even if it's not compounded, it's going to be 240% return on capital. And so I think that's the biggest pitfall, especially for first-time investors and those with less than 1 year to 6 months of experience. Well, other than that, I think they're more focused on the reward and not the risk factors.
Mm-hmm. Yeah.
Right. Like when they take a trade, they're thinking of the target and not what happens if the market goes against them. And anyone who has traded for over a year or two after busting their accounts a few times will look at how much they stand to lose rather than how much they stand to gain before they enter a trade. So that's one thing that leads to poor money management skills and so on. So yeah. See, getting the market direction right is not very hard, considering that most of the first-time investors, like this mass influx that we've witnessed in the last 1.5, 2 years, they've entered at a time when markets are going up. So most of them are long, right? They're not going short. So
that's right,
they're on the right side of the market, and if they lose despite being on the right side of the market, it's because of these reasons.
Got it. Yeah. And when it comes to algorithmic trading, right? Because obviously at Rain we're more focused on algorithmic trading. This is a two-sided question. The first question I had is why do algorithmic traders prefer oftentimes to go with Fyers? Like I said earlier, a lot of our users do end up opening up an account with Fyers. We're very kind of broker agnostic at Rain, but we've noticed that a lot of our users are going with Fyers. So number one. Number two, what are some mistakes algorithmic traders make when they build strategies at that level? What are some insights that you can give me?
Yeah, so I think the reason why many of the systematic traders prefer us is because I think we understand their needs better than most others, and we're willing to make those changes very regularly. So like when we first launched APIs, we've made many changes. And so, yeah, that's going to continue, and you can see that. So that's the main reason. We also offer it for free, which helped us initially, but I don't think that's the main factor anymore. Right. So yeah, and see, the thing is, most brokers don't understand technology. You and I both know this, right? So that's not their area of strength. And so it's mostly outsourced and neglected. And at Fyers, the most of the tech stack is built in-house. So we have more control, and then we can do what they ask us to do. And yeah, so I think that's why. With regards to the mistakes they make, I don't think I can pinpoint to anything other than the same thing, like money management and stuff like that, because there is this misconception, right, that algo traders are more profitable than discretionary traders.
Yeah.
Well, because if you speak of the pros and cons, on the pro side, everybody will say that because it is systematic, human emotions are eradicated and so on. But there are disadvantages to that too. Sometimes your gut instinct works in your favor. Sometimes you have, sometimes you retrofit your strategies, in your back test.
So many mistakes you can make, especially with back testing and things like that, right? There's a million mistakes that you can make. So
100%. I think being undercapitalized is a big mistake, because if you're going to invest the kind of time and energy, you're going to hire somebody who can code your strategies. If you're going to spend that much time, I think the fact that most traders do not value their own time is the biggest mistake. Because if you value your time, you're going to deploy a sufficient amount of money to compensate for the time that you spent, in forming your strategies, right?
Right.
Being undercapitalized is a sin, I think, because what's the point?
Yeah, makes sense. Especially if you're going to spend all the time and energy to come up with algorithms and there's an effort required with the entire activity, right? So you might as well make it rewarding. And 100%, you have to be well capitalized and to
yeah. Please go ahead. Yeah.
I was just going to say one more thing. There's a big misconception, like you said, that algorithmic trading is automatically more profitable. The only caveat to that is, I would say, if you do want to be consistently profitable, then turning to algorithms might be a good idea, right? Because it just kind of systemizes everything that you want to do anyways, and it eliminates the emotions from the picture. But that being said, that doesn't obviously mean that if you are using an algorithmic trading model that you're going to be profitable, right? Those two things are completely independent. So
yeah, I agree. And it takes a lot of time to kind of tweak strategies and to get it right. It takes a lot of time. And so,
it's a lot of work. And it's very difficult, right?
Yeah. And most people don't get that bit, I think. Yeah.
100%. How do you think, this whole algorithmic trading space has evolved, over the past 5-10 years in India? Because you've been at the forefront of it all, right? So how do you think, things have changed, and where do you think, things are going?
Okay, so I think that is still very nascent. There aren't too many people as a percentage of the total number of traders out there. It's insignificant. So it's these early adopters that are maybe in several thousands are the ones who are actually algo trading, but as a percentage of the total, it's very negligible. But I think the biggest thing that has changed maybe in the last 5-6 years is that it has become less taboo. There are more people talking about it. More resources available to learn about algo trading, I think, because I remember in 2011, I wanted to do it. And then you had this, bunch of data vendors, you had Amy Broker, and it was just so clunky, and the community wasn't very well developed either. Right. We had 1 or 2 forums, and those guys were very inconsistent. So now things are evolving. So access to information, people do not look at it as a taboo, or they don't see it as an obscure thing to be involved with. And so that has changed. And there are new ecosystems being built with guys like Tradetron and many of the guys building API bridges and connectors and so on. And so it is coming in, but it's really slow, and I think it's good. So it wouldn't be all that. Yeah, so it's building up slowly, and so
No, it's 100%. And you mentioned Tradetron. Tradetron is a wonderful service. We just launched our own marketplace this past week. I don't think I've told you this yet.
You haven't.
It's called Rain Trader, right? And within Rain Trader, you have access to a marketplace. And the reason we launched it now versus before is because, like you said, now the ecosystem is there where you can build these types of products, right? There's so many brokers which are looking to work with vendors such as ourselves. And, maybe a few years ago, these products wouldn't have existed because the ecosystem wasn't there, So let's stay on this topic. What are some good resources for algorithmic retail traders in India? If I want to go out and build a strategy from scratch, or if I want to learn a little bit more about, how to build a strategy or things like that, what are some general good resources in India?
I think if one has to learn it in a phased, organized way, then I think Quant Institute's course, the EPAT course, is really good.
It's excellent. Yeah.
And it is very nice. And they put in quite a bit of effort to educate people. And the last I know was the batch had about what 300 to 500 people. It was quite commendable. This was about 4 years ago. And so, yeah, a lot of people are going down that route. Quantinsti is doing a good job with the education bit. They teach you about strategies, about how to code them, how to backtest them, which languages to use, and so on. So it's very informative, and it's condensed into like maybe a 1 or 3 month course. I'm not really sure, but that's good.
Yeah.
And the books by Ernest Chan are good to get started with.
Yeah.
Very simple, but I think the beginners should read that. And so, yeah, he's written a bunch of them, and I think they are
I actually interviewed Ernie last year. He's just an amazing, so smart, and he can just talk about algorithmic trading for hours and hours. It's just amazing, how much passion he has, and he's written some amazing books. You're right, yeah.
Yeah, I mean these are some. I don't know where they are.
So let me show you the books. Yeah,
it's right here. So these are some good books. Can you see this?
Mm-hmm. Yeah, I have that same book.
This is a good one. Yeah, and the one on quantitative trading is good too.
Mm-hmm.
So yeah, these are good books to read, and more than like learning how to deploy strategies, it's more important to learn how to create strategies, and so for that you'll have to maybe go down a different path. So yeah,
100%. And when it comes to strategies, for algorithmic traders, what are some good strategies, a rookie algorithmic trader can start with, when it comes to just the complexity of things and, starting out with something very simple? It doesn't have to make money, right? But just something, which they can kind of, they can get their hands dirty with.
Well, if I was just starting out, I would look at anything which has a higher probability of success. So I would trade with the trend and probably trade options. But I think you are the expert on trading strategies. I generally stay away from commenting on these things, but I can, yeah. I mean, people trade all kinds of things, right? And they can go on and on about it.
No, I would disagree with you there. I would say, stay away from options initially because they're just more complicated to learn. If it was me, I would just build like a long only equity system, and then kind of go from there. Sounds good.
That's much safer. Yeah.
Yeah, it's safer. It's just easier to understand and less complexities. Less things going wrong. No expiries to worry about and things like that.
Right. Yeah, that makes sense. Yeah.
Yeah. So to kind of, end the interview here, Tejas, the last question here is, what are your personal and professional goals for the next 5-10 years?
Interesting. My personal goals, I want to become better at playing chess. I really love the game.
So we should play sometime, yeah.
Yeah. So I was addicted to the game, and took a toll on me because I would play till like 4 a.m. in the morning. And the next day I'd wake up and think, did this add any value to me? Because I'm not feeling all that productive the next day. So I have stuff to do. So I cut down on playing chess a few years ago, but I do love the game and want to get better at it. Maybe get better at judo and jujitsu. I love martial arts. So yeah. But on the work front, right, I think, like I said, we want to be the torchbearers of the retail investing community, and we want to give them market access through our products and services. And we don't really have like these huge fancy goals. We want to become number one or anything like that. I believe in adding value to the users rather than showcasing the number of users. And so it's just been the approach. We like to go an inch wide and a mile deep, not a mile wide and an inch deep. And so that's the philosophy on which we built Fyers.
I really respect that, man. And one thing I've always respected about you is you've taken in a very active approach. In terms of staying engaged with the community. Every broker has their own ways of doing business, right? And it's not
Correct.
like
Yeah.
there's a right way or wrong way of doing anything. Like you said, it's just all about carving your own niche, and there's enough space, for many
There
brokers.
is.
People
There
might be
is.
surprised for to see me interview you, but for me, it's not like that at all. Because there's more than enough space for many brokers in this field. And as long as you're doing something which you enjoy doing, and you can kind of find a niche that you can kind of latch onto and get a loyal following through, then I think you're good to go. So. But on that note, thank you so much, Tejas. This was a really nice interview. It's nice to kind of get to know you, through this talk, and let's play chess sometime, And
Sure. It's lovely
and
chatting
thank you
with
so
you,
much.
Raghu.
Yeah.
Thanks for having me, man.
Cheers.
Enjoy your week. Bye.